Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for September 30th, 2018. Before I get into the charts and what we're looking at pretty much over the weekend and going into next week, I have to talk about our current seasonal offer, and we only do this once a year, and this today actually, which is Sunday the 30th. This is the last day to take advantage of the new seasonal offer. It's to become a ForexAnalytix subscriber, it's buy 1 month, get 1 month free, or you pay for 4 months to get 6, so you get 2 months free, or you pay for 8 to get 12 months, so you get 4 months free. We only do this once a year. So if you guys were even thinking about becoming a ForexAnalytix subscriber, trying it out, this is the time to do it, because we only do this once a year and it's almost over. So once you sign up and you take advantage of the new seasonal offer, which is right here, make sure that you go ahead and download the mobile app, and you can do that at the Google Play Store or the iOS Store. And so you have all of our analysis, our updates, support and resistance level breaches, new patterns in play. You have that all delivered to your mobile application. So take advantage of this offer, do it today, and we'll see you in the exclusive ForexAnalytix chat room when you do that. All right, so now let's talk about this. Well, first of all, this weekend. So this weekend, we have a lot of news that has come through, and some of the biggest news. Well, first of all, in China's manufacturing PMIs missed the mark, so that might affect sentiment a little bit at the open. But also, one of the big pieces of news over the weekend is what's happening in Canada. And Canada and the US are trying to really shore up the NAFTA agreement, and their soft date was today, actually, on the 30th of September. So they're trying to wrap up the NAFTA negotiations, and it looks pretty positive. You can actually see how the Canadian responded actually on Friday due to the strong GDP numbers out of Canada. The dollar Canadian gave up all of its weekly gains, and you can actually look at the weekly candle. I mean, the weekly candle is a gravestone doji. That's not a pretty look if you're bullish. So we may gap down on Sunday when the markets reopen, but also keep in mind there's a big trendline support that's coming in probably around 128.50. So I think anywhere between 128.50 and 128, you've got to watch it. If you went into the weekend short the US dollar Canadian because you had a lot of momentum going in on Friday, you just want to keep an eye on how the price reacts down here at this really important support. It's also a 618 retracement. You see it at 128.53. There's a big trend line there, and it's a multi-year trend line that really comes into play. You can see all this support down here. So there is going to be some volatility in the US dollar Canadian as the market opens on Sunday. So just keep in mind, if you have any Canadian exposure, or if you're looking to establish some, just realize how big that support is there. Now, there's a lot of things that are happening this next week. We have, this is non-farm payroll week, so we have both Canadian and US employment, and we have to watch the employment data carefully. I know a lot of people, or most people, are really focused on the average hourly earnings and seeing if wage growth really keeps up with inflation, which I think is important. As inflation ticks higher, you've got to you want to make sure that you have employment wage growth happening as well. But because of all the tariffs and the trade wars that are taking place here in the U.S., especially against Canada, or excuse me, against China, that's going to really start to bite the real economy in the coming months. And how I think it's important to watch employment trends moving forward, going into the end of the year. You take a lot of small businesses, and small businesses make up such a big part of the employment picture in the U.S. The tariffs are likely to start biting small businesses, and when you have CEOs across the United States that are watching this trade war unfold, how they react from an employment standpoint is pretty important, because CEOs and our business leaders across the country may be less likely to continue to add at such a aggressive pace new jobs if they start becoming concerned about pricing issues regarding tariffs and trade. And we've had such a strong employment for such a long period of time that that is now becoming a risk going into the end of the year, in my opinion. Will it be this week that it starts to really reflect, from last month? I don't know, but I think that it is going to warrant some attention, especially that we're a lot of economists would say we're very close to full employment, and will the employment numbers start to deteriorate and wage growth not be able to keep up with the pace of inflation moving forward? And I think that's going to be a big concern. Like I said, is it going to be reflected in this month's numbers or last month's numbers rather, that are reported on Friday? I don't know, but we have to obviously take it, start paying. As I know, I sound like a broken record. We just need to take very close attention to all this information. Now, as you're dealing with the euro dollar has been a very tricky animal to trade, and you can see there were so many traders that were very bullish the euro dollar as we were trading towards 118, and then this last week the dollar strengthened, the euro fell, Italian worries were in the forefront, the euro broke lower, but is the euro broken? How much downside is there in the euro dollar? I mean, you look at like the longer term charts, we have a big long term head and shoulder pattern. You can see it, it's pretty clear. But is the euro destined for 110? Or are we going to show, maybe an inverted head and shoulder pattern technically, where you have, here's the left arm, left shoulder, head, right shoulder. Will we reverse again and attack 118? I think a lot of those answers we'll get a lot of those answers towards the end of this week, if not at the end of the week, depending on employment, to see if we also have to see if the worries about the Italian budget is real, and we're going to have to see how the euro responds this week. So it's going to be very tricky. I think you have to be respectful of the euro dollar as we approach support around the 115.50 level. Okay, so if you're really short the euro or you're long the dollar, you've got to be a little careful here. At the same time, does that mean that you need to start getting bullish? Well, I don't know. I think you have to watch price action. I think price action is going to be so important when we're down at 115.50 if we make it down there this week. So I wish I had more surety on what I was looking for, but I don't. And it's been a very challenging market, especially when you're dealing with a market that is predominantly driven by headlines. There are a lot of risks when you're dealing with not only the dollar, but you throw the euro in the mix as well. If you take a look at like the cable, the pound's been under a little bit of pressure this last week, and you can see we rejected this 38% retracement. We are near 130. 130 is obviously a big battle zone, if you will, for bulls and bears. Brexit headlines are hot and heavy, and they probably are going to continue. So I think you have to watch this cable as we're approaching this 129.50. If the dollar gets some broad-based dollar weakness, if you will, and the euro bounces from the 115.50 level, it could very easily drag up the cable again. So being very short the pound doesn't make a lot of sense to me either. So I think we've seen some downside here. We could actually see a bounce, or we could see a pullback in the dollar now. If you look at the Aussie overall has been trading pretty heavy, and it makes sense because of the ongoing tensions between China and the US. Now, Australia has a rate statement this week, and it's actually going to be Monday night, or for us, but it's going to actually be Tuesday morning in Australia, so or an Asian trade. We do have this very strong down channel in the Aussie. You can see it. It's really captured the attention of the Aussie dollar since the beginning of the year. We do have to break above 73 cents. If the Aussie dollar breaks above 73 cents, that's going to be a really nice setup for a long. It's probably going to end up squeezing the Australian dollar. The RBA posted or published a report. I think it was last week or maybe the week before last, how the Aussie dollar may actually perform better in face of a China-U.S. trade war. It's a very interesting read. I think it's published on the RBA website. I don't have a link for you right now, but see if you can scout around and find that article. I think it's very interesting. But I think we should watch the Aussie. Technically, as long as we're below 73 cents, the bears are in control here. But if we break above 73 cents, things can get a little bit more interesting. Now, and that goes same with really the Kiwi. The Kiwi and the Aussie, I don't think I have to talk too much about them both. I can, just kind of reference the Aussie at this stage. We talked about the Canadian, and I'm going to talk a little bit about the dollar yen, but I'm not going to steal the thunder of a blog post that will be released probably before you watch this video. So if you follow me on Twitter, you'll probably see the blog post, and I think it's going to be an important one for you guys to read regarding the dollar yen, because I am watching the bond market, S&P, and what's happening in the dollar yen. And the one thing I want to point out here is the dollar yen did close in breakout territory. We closed above this 113.20, but I don't think the path of the dollar yen is very straightforward. So if you want further information on the dollar yen and the S&P and the 10-year bond, please read that blog post, and it'll be posted by the ForexAnalytix Twitter account, which is simply ForexAnalytix, or Pipzar, which is my Twitter handle. So make sure you're on the lookout for that blog post, okay? Because I think it's going to be an interesting read for you guys, and it's something that it's actually going to be more of what I'm paying attention to going into the beginning of this next week. The Canadian's going to be a little tricky. I think the Euro's a little tricky. That doesn't mean the dollar yen isn't a tricky animal, so to speak, to deal with. However, I think the path for the dollar yen might be a little bit more clear once you see other things happen in the markets. And guys and gals, if you're watching this video and you found it helpful, make sure you click the thumbs up button if you're watching it on YouTube, and make sure you subscribe to our YouTube channel so you don't miss any of our great interviews. Dale Pinkert is back. He had double pneumonia, so he's back and he's doing interviews again. And if you're not around to listen to those interviews, at least you can watch them when we record them and we publish them about an hour or two later. And remember, guys and gals, this is the last day, really the last weekend, that you can take advantage of the seasonal offer. It's the best prices we do all year long, especially if you're looking for a semi-annual or annual subscription to become a ForexAnalytix subscriber. So take advantage of it. We'd love to see you in the chat rooms. That's where I spend all of my day throughout the trading day. That's where most people chat with me, and we talk about trades and what I'm doing and what I'm thinking, and not just me. It's the rest of the community. We have such a great community of traders, so many seasoned traders that trade full-time. It's one of the things I pride myself on, is I've always surrounded myself with a great community, and to be part of it, you have to be a ForexAnalytix subscriber. So take advantage of this offer. Once again, my name is Blake Morrow with ForexAnalytix. I want to thank you for listening in. Have a great trading week this week, and good luck. Good luck. I'll see you on the Face webinar tomorrow morning.